Welcome in, everybody. We are live. We are live. Axis Alive and Ryan Patrick Hefner here today, this morning, giving you the 48-hour market update, market recap across many sectors, namely cryptocurrency. So I'm just going to wait a second before we bring up any charts until people start to float into the chat here.
Good morning.
Yeah, thanks for joining me this morning on a whim. It's been quite an interesting couple days of price action leading into this weekend with everything that was going on with Blood Moon and with HEDRON auction pays coming off tomorrow and dollar crashing and bonds ripping. And I mean, it's been insane. You got any takes?
Oh, man. I mean, I think even just recapping where we were with the HEX community before all this, right? You had the SEC FUD coming in. We had Guidewell starting a price purchase, right, at 0.033 on HEX, right? People thinking bottom is in, and then you had this SEC stuff coming in with a FUD, capitulation, spraying off of the lower lows we just made, and then sweeping everything else you said, and you have a total sentiment shift. And almost kind of like it's like a cleansing. Honestly, it's like a cleansing, yes, in the industry itself, but a cleansing of the Hexican community and the mindset that they know of taking us this far and is going to continue to take us that far. So in that way, it's a good thing because people needed that reminder. They kept seeing all these other projects launch and maybe a 1x here, 2x there, 4x here, and these other projects. People really forgot, what was super, super strong in its roots, right, which was Hex and what Richard's been doing. And you've just seen this crazy sentiment shift in the HEX community and just a lot of eyes coming back to HEX because of the inevitable, right? Richard couldn't have planned exactly when this stuff was going to happen, but this stuff was going to happen. We didn't know exactly what exchange or who, but man,
That's a great point.
themselves.
It definitely has opened my eyes to possible insider knowledge that, either Richard Hart or others within the top echelon of Bitcoin holders knew, and they obviously talked to each other, right? So there's got to be some level of knowledge that was already they were already predisposed to, that he just knew that with all this outrage marketing and flaunting in this, that he knew that it was just a matter of time as prices began to fall. That's typical 30, 40, 50% drops in crypto are normal, that was going to be enough to weed out all the bad actors out of the space. And now with the failure of FTX, you're starting to see all of the different connections between those top players and how they all it seems like it really just seems quite fishy how everyone is interrelated and how regulation was trying to, the regulators and the exchange owners were working together in a lot of ways. That stuff's starting to come to light. So, if that all ends up being true and provable and this and that, and along with now you're seeing FTX getting hacked this morning or something, supposedly funds are just disappearing and SBF's on a flight to the Bahamas or whatever, this or that rumor that's on the street. What ultimately matters is that this is the type of worldwide events that you look for when capitulation occurs in markets, because it really is just a flush of, weak hands or negative actors just out of the system. So what this does for HEX, obviously, is it just makes HEX look better and better and better. And obviously, Hexicans are not phased by the FUD. We know, we're earning trustless interest every day, and our coin is traded 100 or 95% transparently, all on chain trading. So it and all of its derivatives are 1-for-1 spot traded all the time, and that's so comforting knowing that you're in an asset has great price appreciation potential, and it prints you. You're winning on the U.S. dollar side that way, and then you're also getting such a high reward and interest payments, through the contract. So it's going to be quite the little devil in the next bull run, I feel like. But yeah, so this is all really exciting, and so I guess here we go. We're going to pull up some charts. Obviously here on the HEX chart, it's on the 2-hour chart here, it's printing an ascending triangle, which that's usually a bullish continuation pattern. So, I'm not going to stand here. We've been covering the markets now, myself, Silver, Sloth, and my other partner, Bob Peel, for some time. And we're not confidently going to say there's no downside risk, across these assets. But when it comes to HEX and the way it's set up, it just seems like it's holding its position much better than a lot of the other options.
Yeah. And Well, I wanted to circle back real quick on like the sentiment shift. I think there's a couple of key things happening in the space. What I really mean by cleansing is, like you said, the bad actors are going out, and some of the people that have been like a beach ball, kind of like pushed under the surface for as long as possible. Richard Hart being an obvious one coming to light here, right? Bigger people like Ron bringing him on his Twitter pretty soon. Bitboy, I think, is going to be an important player here. Love him or hate the guy, wherever you stand. The dude is putting in serious work as pertains to the SEC. He's continuing to get certain things right. He's shifted his worldview. He's updated his worldview. Apparently, he's going to be bringing him on from rumors that we've been seeing in crypto Twitter to bring Richard Hart on again, which is a massive time. There's so many eyes in the space looking for some sort of leadership. There's no leadership right now. You people fucking crying on stream instead of directing people in the direction they need to go, right? These people are wrecking kids, shoveling them into exchanges, getting them wrecked, and then crying on stream about people who haven't done any harm to people. It's maddening. You're starting to see the shift of the sentiment into people's hands that rightfully deserve the attention and the influence, right? And I think that's a big deal, and I think that's what that cleansing needs to be for the space to become a bit more clear.
And unfortunately, even though that a lot of these people that are against, Richard, or they don't understand HEX on a technical level, they're just so quick to dismiss it or just call it a scam and not look into it. It's funny because like some of the smartest people in the Ethereum community, they just want to project their own opinions about something without looking deeper on the issue. And that's literally why people miss big opportunities in cryptocurrencies, because they're so quick to dismiss something that's doing something, And so I guess to them, y'all need to like step back and realize like, yeah, you can build the tools, you can build the cool contracts and this and that. But if someone like Richard Hart doesn't come along and create value in the system, then what's the point? Like, he literally tried to create a product that would give ETH and HEX are intimately tied together. Like ETH does well because HEX is a good way to protect yourself from inflation by earning yield that can also earn you back more ETH than you started with. That's the whole point. Is it's a give and a take relationship between ETH as a utility and HEX as a store of value mechanism, and they can work interchangeably over cycles of time. So, people just don't understand the complexity of these things. And so, I mean, I honestly just wish people would take honest looks at this stuff. The smart money isn't going to just ignore huge price pumps on HEX. Like once that starts to happen, a lot of the opportunity at these levels will be gone.
Well,
and I think that's really clear when we look at the HEX Bitcoin and the HEX ETH chart.
Oh, I can't wait for us to pop those up. But the worldview is forcibly being changed. Like notice some of the bigger players tweeting about, I don't know what is right in crypto anymore because all these things are happening. It's forcing people to update their worldview. And there's only one player left right now that has had perfect price performance, perfect uptime, right? All this stuff backing it. And it's HEX. So you're seeing the next step being played in acceptance, right? Market acceptance. That's a big deal. That
you just made me want to pull up here the nomics is top cryptos. Like this is a great opportunity to go through and just kind of see a quick take on a lot of the top cryptos right now, and just kind of maybe your and our opinions of them. So like in my opinion, like a good crypto has a great community and a good leader or a good leader or head figure of that crypto. In the case of Bitcoin, obviously Satoshi is like the mysterious originator of the coin, and it's got this huge mining economy behind it. And so it's definitely the most decentralized on inflation and issuance level, but it's maybe not so much in a holders level, because most of the people coming into crypto over the last even 6-7 years have just not been able to capture enough of the supply to be a meaningful actor in the system, which is why when institutions came in, the price was able to get back to the all-time high. And then the big question mark in my mind with Bitcoin was, at what point in the last bull run did the leverage start to get amped up? And at what point did the tomfoolery start to happen with all these Three Arrows Capital and this FTX and with Celsius and all these other insert your failed coin here? At what point did they start to lever up the system? And when I just looked at the Bitcoin price chart, like historically, the number one point was when we hit 30K and we had I think it was like 40K. We had our first major breakdown. And it seemed like that's when the chart started to change, but that's neither here nor there. The point is that, Bitcoin's here to stay. It's got a huge, robust mining economy behind it, and they're getting hurt right now. I don't know. Did you want to dig into the miner capitulation data on that at all? Or
sure, yeah. And I have to imagine that's the only reason why this cycle had a double top, right? With the Judas candle there. because of some of this shit with FTX and, you know, all the, just
Yeah, it
as
was
you
the
know, I
first
guess
cycle we've
more,
ever had that kind of a pattern on the chart.
well, I think you have more derivatives, more exchanges, more money that is allowed to use derivatives and, you know, 10x multipliers on it with leverage. You have patterns and market cycles shifting a bit, maybe not changing insanely so, but definitely shifting, right? Where something like a double top could exist. But yeah, that definitely lends credits to that, you know, theory potentially holding some value there.
So some quick things to point out here is this is called the Bitcoin production cost indicator, and it shows historically where mining became less profitable. So you can see
Mhm.
back in September. This is really interesting. So little history lesson for you guys. In June of 2016, you see that Bitcoin started to get unprofitable to mine at a price of roughly $400. And then this huge spot run up in price was around in the middle of June when the Antminer S9, which was a huge leap forward in mining capabilities, was launched at that peak. And then after that, the hash rate, I could have to check the hash rate chart, but I'm assuming that the hash rate increased by a dramatic amount, which made mining unprofitable for the end of 2016, even as the price continued to rise and chase that yield up to like the $1,500 level. And so that's ultimately that innovation in mining is what is one of the factors that drove the $20,000 Christmas on Bitcoin. Now, moving forward, after we peaked, it took many, many months to come back down to that $6,000 level where we started to see mining become unprofitable once again. And it was short lived because this run up, what it did is it brought in a whole new wave of investors into the space that was willing to take the bill at the $2,000 or $3,000 level where it bottomed and run it back up. When then you had things like there was a plus token Ponzi going on over in China at that time that they were running up price in the same way that they ran up price for a second leg in this cycle. So
Yeah.
that was that because if you take this and you just draw a nice clean curve, this is what the chart should have done. But it didn't because of all the manipulation of paper traded Bitcoin and then COVID. So you got this like reversion to the mean. And this is what we're looking for in the next cycle is some sort of a clean parabola like the last cycle. But you're just not getting that anymore because it's no longer being traded more genuinely, if I could say that. Now, going to modern times, you can see that we're in this downtrend. Morning, everybody in the chat. Hot Rollins, welcome in. Godfather, Name, Pulse Tube, thank you for being here. If you guys have any questions, please just feel free to ask. So currently, you know, after the breakdown of 35,000, which is actually when back in May, when it was May 5th, Thursday, when I say we, it was myself, Whales Only, and Wave 3 TV. We went live with the big deep dive presentation, and that presentation has gotten almost 20,000
I
views
remember
across
that. That was when
multiple
HEX
channels.
was what? It was like rumors of May launch for Pulse Chain,
There was a
right?
rumor for a May launch for
Yeah,
Pulse
we ran up
Chain,
to 20 cents.
and
Mm-hmm.
HEX ran to 20 cents. Correct. I called the falling wedge continuation pattern, and that's all. You know, you can go back on my Twitter and see the proof of that.
Yeah.
Anyway, that 10-cent move, you know, that people that took that call made 80-90% on that trade. So, but here, that's neither here nor there. So at that capitulation moment, inside of that slide deck, I had a chart that showed us breaking down to the $20,000 level, and that you could potentially see like a 2015 bottoming period around that 20, you know, 17, 18, 19, $20,000 level with Wix. And so personally, I mean, I'll say reserve my judgment for later in the stream, but you know, look at this is like unprecedented times for mining profitability. It's like near all-time lows. If I got to pull this chart up because it's just going to illustrate my point even more. Bit info charts. So here's a cool resource for anybody who doesn't know already. It's called bitinfocharts.com. This is they show you live data from the blockchain of all these separate currencies, you know, Bitcoin, ETH, XRP, Litecoin, blah, 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 Dogecoin. You can check out the rate of issuance, the hash rate, all this and that. So what I'm looking for is mining profitability. So when I click this tab, you're going to see here when I click the log button and I zoom out to the all-time chart, you're at all-time lows for mining profitability because the hash rate is so high and it's such a competitive industry and the Bitcoin prices hurt so bad that we've just never before seen this level of stress on the mining economy. Now, there's also been innovations in Bitcoin as far as like the cost to produce coins. So, you know, whether that be using alternative energy sources like natural gas or liquid cooling to bring down your heating and cooling costs. Um, um, Using like bio-generated fuel, such as like converting like waste products into energy, and then that there's certain ways you can do that. Hydro is another one. So they're able to bring their costs down to like record lows, and it's still putting pressure on the mining economy. So not only that, but my last piece on this before Ryan goes off is the GBTC premium. So the
You knew I was
GBTC
gonna go off on that.
premium, it's pretty nasty. It's like, so we just saw a big spike down. It's so basically Bitcoin on paper is being traded at $9,000, like roughly, like around that range, $10,000, based on the discount of the GBTC price, which is basically paper traded Bitcoin. So you're no longer trading the asset, you're trading a derivative of the asset, but that's on somebody else's books. So this chart here is going to show you the spike down. So it's 41%, so 41.69% down. So if I go to the Bitcoin chart, you've seen now how the miners are being impacted and how that's going to add sell pressure to the chart. This is a huge opportunity for large players globally to really soak up the supply and really kind of leave everybody else behind, because there is still the whole limited amount of Bitcoins that will ever exist, and there's still a trade to be made there over like a 10 or 20 year time frame, long before the Bitcoin security model really breaks down and doesn't work anymore. So what was I going to show you? Fuck, I just spaced. Let's see. 41.6% down. So if I measure here on the price chart, a 41.6% drop from this
Tommy's
level,
11K.
41.5. It's literally 9,800. So it's where my green target. And by the way, that level, if you go back in time, 41% down, it's literally the low of the 12K crash right before the bull run started. Let me show you exactly what I mean.
So we're like within 5-10% of like 11K there on that target.
It's insane. Here it is. This green dotted line shows you this was the 10.5K bottom. And by the way, I got to brag a little bit. When this sell-off happened and the price was holding support here during, what was that, September, I think, of 2020, I was leverage trading Bitcoin back then because, HEX was still quite new. Let's go back in time a little bit. So HEX launched here December 2nd, right here. And I think, for lack of better, there was a triple bottom here on the Bitcoin chart. And this really should have been the beginning of the bull run. It should have been a nice, clean thing. But then you had the COVID crash and all the global events happening. But anyways, HEX launched here. It was a well-timed launch. And when this capitulation happened, it ripped hard. But anyways, so it was still not as interesting yet. And so I was in it, but I didn't really. There was a huge decline. It was like a 99% decline on price. So I had forgotten about it. But during this time, I was leverage trading Bitcoin. When I saw Bitcoin hit these 10,500 levels, which is where our 41% down target is actually leading us to, this was the most support I've ever seen in the chart for like years of the bear market. And I was so impressed. It was like weeks and weeks and weeks of just marginally higher highs. And I remember this trading pattern here, and just being so excited when that broke out. And so that was fun times. And that was what launched the bull run. And so that's basically where the price wants to settle back to based on where GBTC is trading at right now.
Yeah.
But here's the thing is like, if this candle here on like, let's say a weekly time frame can close above 18.6, there's no reason why it would necessarily have to go lower unless you started to see further contagion across the markets where other exchanges are impacted, other products are impacted, and more users are affected. That's ultimately what would bring the price down to these lower bands. But this goes all the way out until February, March of next year for final, capitulation if that were to occur that way. So it's got rejected off the midline of this downtrend channel now multiple times, and the miners are under pressure. So somebody's going to have to pick up the tab. And I just see it as a huge opportunity for institutions to buy for 6 months, as a lot of the global pressures are, the release valves kind of let off on the Fed's decision making as far as extreme policy. So what do you got for that?
I agree with most of what you said, man. We have a lot of factors at play here, but fundamentally, mentally speaking, from institutions coming in who are already big time under pressure, right? They have loans rolling over at higher interest rates now, right? So you have, you know, cap expenditures at all time lows with what's going on with the tightening, right? QT coming into the mix here, higher interest rates. So institutions have less money to play with in general. The miners are making way less money, or just negative in general, and smart players don't mind picking up Bitcoin on a derivative, right? They don't care if it's here, or they're not putting it in cold wallets. You know what I mean? Like, they don't give a crap. So what does that mean? Well, like Richard has been saying, just simply put, like, hey, bear ain't going to be over for Bitcoin until the negative externality of grayscale Bitcoin goes away. Period.
Mm-hmm.
Like, that is continue to, and you've had moments where, like, people are like, okay, maybe we're climbing up, we're coming up, and just in general, something else comes in, and people can be like, oh, well, it was just FTX's fault. It's like, guys, not really. There's a lot of other people probably out there swimming naked. Like, that's where that saying came from Warren Buffett with right, the tide coming back out. And that's what you got to realize, is we're exposing more of those players, the over leveraged institutions who are going to get wrecked. These, call it what it is, zombie companies that are not going to exist outside of that incredibly, easing monetary environment that we had just been in, right? So until all that gets wiped out.
Yeah, and I can give you a really good example of that being wiped out. So, like, when as mortgage rates increased, the housing market's basically, the demand for housing is going way down because buyers are just not going to be willing to pay large interest rates on stuff that they probably did well on for the last decade of like low rates. So they're going to wait for things to kind of change that way, and what's going to cause that kind of a change is like a change in market trend on other assets. So one of the big things, obviously you're looking at the mortgage rates, right? That's a huge piece of this. The Fed ultimately determines the interest rates. But when they do, when these things type of things happen, the indicators that we're looking at is things like bonds and the dollar strength.
Yep.
So
100%.
before we go into Ethereum and the Bitcoin dynamic, and then later HEX, I'd like to touch on like both the bonds and the dollar. So first, we'll talk about the dollar. Like, the dollar has now seen one of the sharpest declines over the last many months. I'm going to try to get the right chart. So if I go to a 3-day chart on the dollar, I mean, this
notice it's been
parabola
happening with Bitcoin hitting new lows. That's important to point out, right?
Okay.
The financial plumbing is redistributing the money, but
Mhm.
not into crypto currently.
Mhm.
That's important to know, right?
Right.
Money is coming out of crypto. Typically, people would say DXY going down, crypto has to go up. That relationship is not always intertwined like
Right.
that.
But where you can see this, so you can see that the dollar lost 11, let's see, almost 6% of its value within a 6-day time frame.
Mm-hmm.
And that's amazing. And you got to ask, well, where did the money flow? And first of all, we broke this, 2-year parabola, decisively. So where
Very
did the
much so
money
converged.
flow?
Yep.
And the first indicator that was on the US 10-year note is like, we had this huge 16% pop. That's a massive pop on bonds. So what this means is bonds are now the inverted yield curve of the days of buying a 2-year note and getting 4% yield on it are going to be ending, and buying the 10 or 30-year note, obviously there's now a giant green candle on the chart. That's 16% on the 10-year. That's where the DXY lost. This is where the move happened, was on the bond chart.
Bond market's the largest market out there, so that's what's actually going to move most of these things most of the
Right.
time.
That's
That,
what's
or the
driving
foreign
this
exchange market.
action.
Because like, people are still valuing the dollar higher than other currencies, right? Like, we're still the better turd in the punch bowl right now compared to other currencies. But the bond market is where all the money really is. And yeah, to your point, I think essentially the bond market is kind of always predicting what the Fed can or cannot do, and they're kind of saying, hey, the Fed's really going to go after this fight now, and predict kind of a normal yield curve here moving forward. But it's crazy because these moves in the yield curve are nuts because they're just so aggressive, and what has changed is that now the markets move off of predictions on the Fed because the information dissemination is so much more apparent.
It's so
they're
fast.
talking more. Yeah, it's not like, hey, they say it and then the markets react. It's they're predicting on what they think is going to happen and what Powell thinks is going to happen, not even what actually is going to happen.
Yeah,
right?
so it's interesting because I've noticed this relationship where people, when I would say people, I'm talking about smart money, is basically trading on trend strength. So like, It's not what the Fed says today. It's what they've been saying for 6 months or 8 months or 9 months, because it gives you a trajectory by which to set targets. So it's a consistency thing where, like, in the beginning, when the Fed started to raise rates, they didn't know when the end was coming. There was no sign, and there was no real confidence in how much they would raise month over month. But now that we've been through, many months of it, now people know and have an expectation of what that rate hike increase is looking like and where it might peak. So that's why you're starting to see money flow back into these things. So just, to give you a little quick, a little shill here on 3 days ago or 4 days ago, when this 10-year popped, we pulled up the 30-year and it had not yet popped yet. And so we made our private Discord group aware of that. And if you trade bonds, or if you look for huge moves like this, when the price was down here at the 80 level here, we called for that it would chase, that the price of the 30-year note would chase the 10-year, and it did exactly that with a 27% move. So there's that too. Like, we're in our private chats and stuff, we're talking about all the markets. We're not just like kind of stuck on crypto, even though crypto is like in my heart and I have a lot of faith in DeFi and HEX and things like that. But ultimately, it's everything else in the trillions of dollars of the economy that really is driving these decisions.
100%. Yeah. And the thing is the last meeting, me and Wales were talking about this. The last meeting was incredibly telling with the Fed, because they basically broadcasted to people who really wanted to know the true intentions. They really broadcasted again what they intend to do and what the intended problem that they want to pick. Like, notice I said the word pick, right? They would rather hurt the economy so much that they have to come in with, as he said, their tools that they have to prop things up, right? The tools they didn't even have back in the COVID crisis, right? The COVID crisis was the first introduction of a lot of these QE policies that we didn't even have back in 2008. So people are going to understand some of these tools are still new, and they've been working on more of these tools, right? Fed Now is another service, right? The CBDC. Some of these things are new tools that can come in that directly inject liquidity into the system in new and unique ways, right? QE, but basically on steroids. So he said at the last meeting, like, listen, we understand that these rate hikes are going to take time to echo through the system and propagate through. We understand that this could cause big issues, but we'd rather go too far and break everything, and then we have the tools to prop it up versus not do enough. And that message was sent clearly to the markets, right? As you can see how they're reacting here. Yes, we had this recent rally, but I think it's clear that this is not something that's going to be, steadfast as it pertains to the shifting into a bull market by any means. But the point is there is going to be something cracking big time. We've already seen it in the foreign exchange markets. We're seeing it with pension funds. We're seeing it with FTX. Like all these zombie companies, bad players that are not economically unsound strategies are falling apart, and there's more of that happening. And the question is, it's not about really picking up exactly what it is, just knowing that it's going to come and to be ready for when it comes. That's all. Like, Richard probably couldn't have predicted it was going to be FTX that had this happen. For all we knew, it could have been maybe Binance or whatever. But something was going to happen, and there's probably going to be more. And this is going to lead us to the bottom of the bear here for sure, because the Fed is not stopping until things break so much to where these new systems and new strategies that the Fed has, whether it be a CBDC or otherwise, the narrative has to make sense for people to accept these things. So that is a big deal that is coming. And how does it affect us in HEX? Not really that much, I think. I mean, we can talk about HEX later, but it seems like HEX is going to be well out of the bear before everything else, just like it always has been. It's going to be leading out as everything else is capitulating. Like, this isn't even, I don't even think this is peak fear. Peak fear is, I think you have like the most doomsday SEC regulations coming in for the market, more exchanges going down. Like, people are just like, you know what, F crypto forever, I'm out. That kind of situation. We're still not even there. People are still like doing stupid stuff after Luna. They're still doing stupid stuff after FTX. That's how you know how much has to fall still to reset the purity of the system. And I think you know what I mean when I say that. And that's where Richard and some of these people that have the balls enough to bring him back on, that's where we're going to shine. Like, we need everything to crumble to really reset the mindset of investing in this space. There's going to be some cons that come with regulation, as we know. There will be. But it's a necessary evil that's going to come in whether people like it or not. But you can still be on the winning side of that trade, right? With real crypto that we're involved in. So yeah, the bond market's interesting. The foreign exchange market's interesting because this stuff can't keep up forever. Like, the DXY just can't keep, even where it's at right now, it's still slapping everything, And I don't,
I'll pull it up again.
Yeah, I think it's going to have another run. To be totally transparent, I don't think it's just going to fall over here and go down forever. I think it could come up again, but it has fallen out of the parabola. We know.
So here you go. I mean, we can go back and we can like, there's two different things we can analyze with the DXY to kind of give us an idea of what this can look like. So first of all, I'll say that I agree with you that the dollar, you know, isn't just going to croak here and go straight down, you know, back to these, you know, levels. That's just not how this plays out. You know, and there's different ways we can we can analyze this. Like if we just took this fractal off this pump and dump and just did like one of these, you could see the most bearish situation for the dollar could be looking something like this, where it tries to consolidate here and just fails to break above, and crypto bottoms here and a lot of the other markets bottom, and they start, everything goes risk on. But that would involve Fed pivots and a lot of continued change at a rapid rate.
Yep.
But what's more likely is consolidation here at these levels for some time. So what might look like is more of like a drawn out sideways, like 1 to 2 year pattern of just trying to recover these levels, for example. And, you know, you can take your pick at a fractal, but the price can easily come back up to the high here of like 113, 114, and then fall back over for a double top. And that could take 6 to 9 months, you know. So if you're going out into the future, like, you know, the crypto won't just bottom immediately. These other market, you know, risk isn't just going to go 100% back on immediately. But we're in like an opportunistic zone as far as like the history. And if you zoom back out on the dollar very, very far, you'll see here how the dollar has been in an up channel now since 2008 crash, basically. And we tapped it once here, twice here for a double top, failed to reach the high for a triple top of the upwards channel. And then then we had our, you know, 2011, 2012 crypto bull run down here on these lows and then, you know, as that shit went bearish, the dollar then ripped back up to the high for a single double top, and then a triple. This is kind of what I'm looking for right now, is like a fail. And then this like ends up being like a bull flag. And then you rip up for the top line one more time. So if I take a fractal of that, you know, what that looks like in modern time, you know, you might get something like this.
That's exactly what I'm expecting.
And that would come in, you know, September of next year for a final. This is the most pain you'll see in the market, you know, sometime next summer. And, you know, if this scenario were to play out, and then that ultimately would be the end of the dollar strength, and it would signify a complete reversal, I think, in the chart. And then, you know, the dollar would fall and crypto would have its run into 24 and 25. So that's, you know, looking long term at the dollar, that's one way to look at it. And then the other way, well, first I'll let you go, and then I got one other dollar chart to show.
Yeah, I think the only thing that, because you know how it goes, right, with bullish and bearish stances, whether it's the dollar or crypto or whatever. The only thing I think people that I'm noticing people shift into is like overly bearish on investing as a whole and just really pushing out these crazy timelines. I want to encourage people to think of the other timeline where this happens on a much quicker scale. People didn't think something like FTX would happen, and you know, maybe people thought that Bitcoin was going to consolidate and chop in the 20K range for another few months. We got capitulation down pretty dang low in 1 week. This stuff happens quickly. It's happening.
Yeah, I mean, quickly. Here's another. I mean, speaking to that point, you know, if you speed that fractal up, I mean, this is what
I think it's going to be much quicker. That's where.
Well, then here you go. Then you have a final high on the dollar. Someone tries to, you know, basically there's a huge flood back into the dollar quick, and then those guys just get completely wrecked by, you know, the government basically ripping bonds higher and then putting pressure on the dollar. I think then you get your bull market at the end of 2023 as this stuff.
Yeah,
you know, this you know, you'd basically start the bull market in March, basically.
That would imply bottoms are in within the next 1 to 3 months.
Right. And that's kind of only personally, if I'm just giving my personal, like, unbiased opinion, I'd honestly believe that the bottom is closer than it is farther away. There's just so many trillions of dollars out there, and the Fed's going to have so many obligations to pay that they're going to have to eventually find ways to find liquidity. And if they're not going to print, where are they going to get it? So
remember, we got to be careful about what asset class we're talking about for bottoming, right? If you're talking about stocks, yeah, just because a few bubbles have popped, right? Carvana down 97%, just totally fucking wrecked. We got to be careful because stocks in and of themselves do have a history of capitulating when the Fed pivots. Because typically when the Fed pivots, there is an absolute shitstorm going on, either geopolitically or an economic crisis. And so I think stocks are a decent ways away from a bottom, but crypto bottoms first. It moves first. HEX moves before crypto in general. So I think, you know, those fractals are important to point out too in terms of timeframes, because I think certain asset classes, like look at the housing market, it just topped, right? Very recently, the housing market's got 2 to 4 years of pain in front of it, unless they totally revamp the 30-year mortgage system and bump it to 40 or 50 years to increase affordability. Something massive like that would have to change in the mortgage market to really prop it
Yeah,
up.
if you're talking like you want like a 6-month turnover on that market. Now, even that though, there's a lot of stuff to get worked out as far as the real estate market is concerned in my eyes.
Yeah,
Like
I'm
that's
just
just
saying,
going to
like
take some time. And
the
you know, there's a
bottoms
lot of
being
people that
in,
have like I think
bottoms
crypto
being is
will
just
run first.
crypto.
It has been. Bitcoin
Yeah.
has been a leading indicator for all these moves now for months.
That's all
So
I'm saying, is that crypto is going to be typically the first that gets hardest with the doomsday events, the first that gets hardest with really
it
just
was the
all this
first
shit.
thing to run the hardest out of the COVID crash.
So
People
people
don't
got to
forget
understand
that
that,
kind of stuff.
you
So
know.
here we go. I got another dollar chart before we move on to some of the more exciting charts. And this is the dollar measured against the total amount of dollars in existence, the M2 money stock or money supply. And above it in the teal color is a 2014 and 15 fractal on the decline of the dollar versus the money supply. So as new dollars are being printed, the value is declining as more dollars are being printed, and then as dollars are growth slows, the dollar value goes up. And so basically what you have here is like this bull flagging pattern to a final rip up before it capitulated. And we kind of had that same thing where we had a bull flag pattern and a final rip up before we went into a falling wedge, and it actually broke down, which is like it's not typical for that type of a pattern, but this is also not a typical chart. This is measuring dollar value against new dollars, and there haven't been new dollars coming in, and the dollar is decreasing because there's less dollars now in the system and more being deleted every day, and all those dollars that made this sell-off went right into bonds to backstop failures in the bond market and in the inverted yield curve. So this has been a giant play on those books at high levels of the economy that are driving this move.
Yeah. Yeah, it's gonna get real interesting, man. And I think the second you see sentiment shift so far to the one side, either way, right? It's people forget like the age-old indicator, because this is a psychology game. When everybody thinks that HEX is going to be absolutely going to ascend, I've been calling everything's going to zero. I don't know, man. Like you've said before we got on live here, like the downside targets, the HEX are so effing low at this point. You know, it's like, what are you really going to catch here? I mean, what, of the 10 people that caught that limit order on the way down?
Yeah,
I'm sorry,
10.
bro. I was busy working. I don't, I don't care. You know, we're going we're in a multiple dollars plus.
In May of this year, there was about 3 to 4 billion HEX tokens that were risky tokens in liquid wallets that could be dumped. We've worked through 60 or 70% of that. And the other day we had a guy EES and dump 84 million in one button press, and it was absorbed into the market. $2 million was absorbed into the market.
And the slippage wrecked him, so he didn't even have full sell pressure on it because of the order books being so thin.
Yes,
it was embarrassing.
And you know, and we can touch on why that happened. I'll pull up the liquidity pool and why the price is holding 3 cents so well in a moment. But so HEX is interesting. But before we go farther into that, I did want to bring up the gold chart, because the whole thing about bonds being pumped is it's a defensive play. You know, now that the Feds and the government agencies and the huge funds and stuff are willing to backstop that and protect bonds price, you're seeing that same thing in this triple bottom on gold as well. Because, you know, gold is a boring old rock, but when in times like these, when there's uncertainty, old money looks for defensive plays. Well, there was this clear triple bottom here on gold, in which we made a call for upside at like 1650, 1660 over, you know, a couple weeks ago. I think it was like 2 weeks ago, or maybe like 12 days ago. And look at the clean breakout on gold. So yeah, just something to keep in mind. Where people's minds are right now, based on what the charts are telling me, is that people are going to be a little more defensive, and it's showing up in the bond chart and the gold chart.
Yeah, absolutely. I think metals in some capacity are definitely overdue for a move, and we're nearing that point in time where, you know, there's so much uncertainty and geopolitical issues that, like you said, they're historically going to do that. Now, whether or not people care for a 2x is another thing entirely, right? But the point is they're always going to have a place in people's portfolios, and they are going to do what they're going to do, and they're a good indicator of like the psychology of what investors are thinking.
What the markets are thinking. Because,
Exactly.
crypto's still a small market. It's only like, it's a 850 billion total market cap right now. So there's only what, maybe,
And that's if you want to believe
maybe
like
100
actual
million
market cap,
users,
right? In the
right?
first place.
You can say that there's like 100 million crypto users, but only like thousands of them have enough Bitcoin or ETH or HEX to make an impact on the market. So it's really just a tiny market.
Yeah.
Last thing I'll touch on metals here is copper, because copper is used so much in industry. When copper price starts to rise, it's indicating growth, and that growth is an okay sentiment. There's sentiment towards growth in the economy. No, that's what it's supposed to indicate. So here you can see there was a nice clean breakout on copper as well that happened, and we've been following this trade since this reversal pattern started to print with higher lows. And then I guess energy costs is another last thing I'll touch on before we go into stocks and then crypto. Crude oil. So your cost of gas is kind of stabilized now for some time. And you see that we had this huge run up early in the year, and then a huge decline. And then with politically, there was things going on between the current U.S. administration and people in the Middle East, that to try to like basically fix the supply imbalance, where there was the shutdown of the U.S. Production of gas through the Keystone Pipeline, and that which put pressure on the prices of gas and changed that dynamic in such a way that politically there was reasons, who knows what the reasons were, that they wanted to try to like buy these. We've been using our surplus. We're at like, I want to say it's like 10 or 20-year lows on the surplus that we had of oil reserves as a strategic reserve meant to be used only for times of crisis. It's been basically evaporated, and we've lost over half of that supply. So now we don't have reserves, and the price is kind of chilling at a high price, honestly. So there's, with the advent of another administration, you might see, gas prices kind of stabilize and come down, but that's, years out. So when you see your gas prices come down, and you see your heating prices come down through natural gas chart, that's indicating that there's less capital that needs to be put towards those costs. And then that's more capital that your everyday person can dollar cost into things like stocks and cryptocurrency.
Remember too, we got the strategic reserve that's still being dumped. We have midterms obviously playing some sort of role. Obviously, how much? I mean, dude, no one's going to know how to quantify that. But I think we're going to see some interesting moves in the commodities market, especially things like natural gas after elections are done. Whether it's the upside or the downside, I don't know. I expect more volatility for sure, especially as we have to inevitably buy back for that reserve, as well as just other events that are going to happen, things that are being suppressed right now, right, for those elections. So it's going to be really interesting to see what the natural gas pattern does, because it's really just resumed its normal bull market, albeit maybe on the lower end of the channel, but it really hasn't stopped. Just people have kind of like stopped paying attention to it because it hasn't been super duper in their face, which how typical consumers will react to these things, right? They're going to see that the gas has gone up because they fill up their car and they have to do it. If the peanut butter gets too expensive, maybe they just won't buy the peanut butter, So it is something where it gets heated up for a short period of time, and then a lot of things like trading the strategic petroleum reserve come in to help alleviate some of these things, because it is such a hot political topic. So I'm expecting, I'd be surprised. Let me word it that way. I'd be surprised if there wasn't more news on oil prices and in general just commodity prices in the near future once the elections close out.
Yeah, so this is a index of commodities, and you can see that after the COVID dip, like commodities have literally just went up as a function of inflation. So as more dollars were printed, there people had more liquidity to spend to buy commodities. So then it just made the price of commodities rise to insane levels because there was a shortage of these things. So what we effectively have here on all of the commodities on this index is some sort of like a fucked up looking cup and handle pattern, which usually is a bullish sign, which means that commodity prices could still come up to the high again.
Oh, absolutely.
Maybe with that dollar move that could finally, end sometime early next year.
Just
with a
look at the
sharp
chart post 2020. What does that look like to you? Like people need to understand, like when those move up, and they will move up without some serious price controls. We're talking like price controls, which never work in any economy. But if they do things like price controls, bigger problems are coming. But when that breaks out, not if. People need to understand that that's where you could basically pinpoint when these systems are going to come in. Because when people can't afford rent, which they already kind of can't, people can't afford food, which they already kind of can't, that is where public dissent comes in. And that is the worst nightmare for centralized institutions, for politicians, et cetera. And they will do anything to stop that, which means that central bank digital currency and all these other systems like we talked about, this is all going to correlate. It's going to rhyme. They're all going to come together for these basically pressures in the system to make it so normal people can't do what they need to do. You know, so this is like the calm before the storm, if you will, in my opinion.
Stocks. I got a stock market index here. So this is a pretty this is a composite index of the S&P 500, the Nasdaq, the Dow Jones, and the Russell 2000. And it's showing me, right, I mean, it's a weekend, right? So the stocks aren't trading today, but there was a clear break of this downtrend resistance, but it's between two resistances. So between the wick high of the top and this most recent wick high and the week of August 1st, that's kind of where the indices are heading. And the Dow Jones closed beautifully above its global downtrend resistance a few days ago. I think it was yesterday, actually, it closed above. So that's really bullish for industry. Like I said, copper price was rising. Now industry is showing signs of strength, the Dow Jones. So I don't think we've seen max pain by any means, but there doesn't necessarily have to be a max pain if you get some sort of sideways consolidation here over, a year, 2 years of the stock market. Just the same thing that happened during the 2008 crash. It's the same thing that happened in 2018 here. So just things to keep in mind when you're assessing the markets.
Yeah, absolutely, man.
So let's go into crypto. Currently, let's see, Bitcoin's trading just below 17,000. It looked, we talked extensively on that in the beginning and kind of like the pressure that the mining economy is under and kind of ultimately where we think this thing can bottom potentially. So that's interesting and all, but Bitcoin's like the old dog in the casino, and it just, is not winning as many bets anymore. So what's interested me is the Ethereum chart. I love Ethereum. I think it's a better version of sound money now that they've made it, deflationary, which originally I didn't really cling to that idea too well. But I kind of understand that, we want a money supply that's, that's auditable and that's doesn't inflate rapidly forever as well. So I have my opinions on the deletion of mining Ethereum, but here we go. Here's Ethereum. It's basically above. So where Bitcoin has still not gotten above its previous lows, Ethereum is holding above strongly. It's like bounced here so many times. And if it recovers this trend line, this 45 here, it's just looking so good. And this pattern reminds me somewhat of a pattern that we saw before the big bull run of 2020, but was also the recovery pattern off the 2018 low, where you had the spike and then you had some sideways, but it gets very volatile in here. So Ethereum is looking very, very good to me. And there's with this wick here, like it's actually produced, it did not make a new low while Bitcoin did make a new low. And so nothing shows this relationship more, this decoupling of Ethereum away from Bitcoin dominance as much as the ETH Bitcoin chart. So when I pull up the ETH Bitcoin chart, why do we care about, if you're a Hexican, why do we care about the ETH price? Well, because ETH and HEX are a team, and when one rises, they both rise. So HEX might be dragging ETH up and vice versa. But look at ETH is starting to decouple away from Bitcoin. So I'll give you two examples. Well, I'll give you first the bearish outlook. Like let's say ETH cannot recover and this thing continues to round over and then breaks down. That would imply Bitcoin's also probably breaking down because of how strong Ethereum is relative to Bitcoin anyway. Bitcoin might be able to drag down the pair, but ultimately ETH has just shown so much resistance, so much resilience in the basically since May of last year, that it's just so strong against Bitcoin. And in the days of Bitcoin leading the market, might be over. Just because simply the security model for Bitcoin's broken and you can't build anything on it. I mean, it's literally a dumb rock. It's like gold. Yeah, it can have huge bull runs and stuff, but percentage-wise, you're better off investing in the actual future technology, which is things like Ethereum and Pulse Chain and those evolutions. So this chart's showing that ETH is eventually going to break away and decouple from Bitcoin. It's clear as day, and I look forward to that day because, as a former, Bitcoin maxi, I enjoyed that. I thought that was a fun coin. I thought, thank God it changed the world and we have it, and it's an asset to back crypto. That's great. But ETH and it's, the other layer ones that are coming are basically going to solve the real issues, that you can't solve with an unscalable Bitcoin. And the market's now wised up to that fact. It's like we're running out of excuses for maxis anymore.
Well, that's that cleansing of the cleansing of the mindset of crypto. Seriously, call it what it is, right? A shift in the thought process of what actually is crypto, a shift of the viewership that Richard's getting, because he's the one, honestly, the only one leading it right now. You still have people like me, Kevin, who is, because you can tell like the narrative is breaking down so much more now, and people that all they can do now is just like that HEX is down 85% in a market where everything's down 70 to 80%. You know what I mean? Like there's no bearing on that. Not like any of their other arguments had bearing, but you can just see they're on their last leg here. If that's the last thing they can link when everything they've shilled, talked about, supported is breaking down, it's a forcing, which sucks. Let's call it what it is. It's not a good way. And I talk about this with the healthcare industry. When that breaks down, which it will in the next 10 years, there's gonna be a lot of finger pointing. There's gonna be a lot of people pissed off, and a lot of people are gonna lose their lives in that setup. But it is what's gonna have to happen to force people to think differently. Look at what happened here with FTX. Tons of people lost their life savings to create this mindset shift. It had to happen, unfortunately. As long as this stuff can
People,
be
it's when good times are good. I mean, people don't have to work as hard or look as far for the truth, because what do they care? Their life is good, and that's literally when people are at rock bottom and they get hurt. That's when the truth comes out, and they have to address reality. They can't create delusions in their own minds anymore. And like HEX has proven itself over time. So I'm going to make a clean comparison here with like how Ethereum traded against Bitcoin. This is still Ethereum Bitcoin. You can see that this was a huge falling wedge on Ethereum that ran from June of 2017 all the way down till basically the right before COVID. It was a little past the bottom of the bottom of the bear was 18, so it would have been somewhere in here. And still, ETH continued to lose valuation because the narrative was still Bitcoin was king and yada yada. So ETH still wasn't strong enough to hold even through 19 when Bitcoin started to rip. But then you had this moment where there was a pivot, and in December of 19, and ironically enough, that was when HEX launched, December of 19, and like people don't give it enough credit. And then ETH started to gain valuations against Bitcoin, and it's never broken this lower trend line. And it's from this giant falling wedge, the breakout, and now it's consolidating, right at this key level of 8. It's 0.08% of a Bitcoin, and the next target would be like 0.14% of a Bitcoin. So, or I'm sorry, 14% of a Bitcoin. I apologize. 8% to 14%. That's where we're headed for ETH Bitcoin pair. Now, you see this falling wedge on the left. That's ETH losing value against Bitcoin. And then you've seen in 19, after HEX launched, the pivot, and now the huge uptrend, and now consolidation below the highs, which is a bullish signal. I'm going to show you guys now the HEX versus Bitcoin chart and show you what's setting up on that chart. Here's HEX Bitcoin. It's one of my favorite charts in crypto. You can see here that it's also creating its own falling wedge against Bitcoin. And we both know that what happened when ETH started to pivot and gain dominance is it ran, it's basically consolidating under the resistance of the all-time high. So if I just put like a horizontal line here, this is ultimately kind of the first level that we're seeking on the HEX Bitcoin valuation. And the time frame, we can look this time frame right now together. You're looking at 2025 is like the latest, the last before HEX breaks out. Like, we know that HEX moves quick when it finally does break out. So I mean, it's showing the same types of structure as the ETH Bitcoin chart. And then when you compare it, you've seen how strong ETH was against Bitcoin, but now look how HEX is against ETH. Same pattern, falling wedge, held the midline of the falling wedge, bounced off it hard with a wick. You're basically sitting on the support levels of the previous highs, from 2021 during that bull run. And it's the same pattern that can play out. And if you're not seeing the comparison here, I kind of feel bad for you, son, because I got no problems and HEX ain't one. It's super exciting to me. Like, you got fundamental things like the highest of stakes documentary going to get launched on a large streaming platform soon. And, Richard's been right about FTX Blowout. He's been right about Three Arrows Capital. He's been right about Celsius being, like I said, there's a lot of fuel being added to the fire. And once the green candles start to print, they will be undeniable. And this price of this coin, because it's traded 100% on, or 95% transparently on chain, and requires spot trading, like, we're not at risk for the contagion of over leveraged, exchange debts and stuff like that, because we're just not traded on there. So ultimately, once the whales run out of coins to dump, that's the end. And by the way, the market absorbed $2 million worth, which is 84 million HEX in 15 minutes the other day. So smart money is going to recognize that, and this chart's going to pump.
Hey, I'm back. Could I post up my chart on the HEX BTC
So I'm going to
chart real quick?
I'm going to pull up Ryan's thing. I'm going to take mine down. Here we go.
Yeah, I think pivoting from ETH BTC is important to this because, like you said, the liquidity is paired there, and as each one goes up together or one or the other, it helps, right? And I want to zoom out first to the weekly because this has been printing for a while. Richard Hart has been talking about this for a while. I think I see a lot of Hexicans forgetting about this ratio, this pair. It's incredibly important. And we've talked about the narrative here that Richard is in this for glory. He cares that he has the highest appreciating asset ever, which means he has to beat Bitcoin. And like he has said, HEX is just a Bitcoin. It is Bitcoin with a proof of work change, right? That is how he's continuously described HEX to simplify it, right? So this is the weekly, and you can see that there's a breakout at some point here in the 21 April. I want to zoom in a bit now. I want to go down to the daily here. So there's kind of a pattern that it's been forming. This is the first breakout pattern, right? Kind of followed this channel here until it finally found support at the upper end of this channel, right, in that April timeframe. Now, I want to show you guys how similar that is starting to look here. Notice we had that quick breakdown and it's been working its way back up. If we continue to find support like it has been, I mean, Axis, you were here, what, 3 weeks ago when I posted this thing, and these are still the same lines. This looks like it's continuing to follow this. Remember, this is HEX versus Bitcoin, right? Bitcoin can go down and HEX could stay sideways at 3 cents and this could still keep going up, right? You gotta understand how these pairs work. So the point is if this starts to come out of here and find support like it did there, and the time frames match up, everything is lining up, this is pretty much your indicator. And here it is just zoomed in even further on the 4 hour. You can see how nicely this has been following it as support, and how when it dips down, it's very, very quick. That capitulation dump, right, of that, however much HEX that was, it was a lot. The point is just keep your eyes on this. This is all Richard really cares about. He doesn't care about the coin dropping 90 to 95%. He broadcasts that HEX is going to do that. That's not what people should be talking about. Right? Smart people are not surprised by that. Smart people are buying on those discounts because they know that that's a feature, right? It's a feature of the coin. It's a feature of the market, especially Bitcoin. So the fact that people even entertain those conversations is wildly hilarious to me because it's a waste of time. This is where you want to focus your attention because this is what Richard cares about, not what stocks are doing or anything else. Those have pressure on what goes on in the whole market as a whole. But he cares about what his coin does against the highest performer right now, which today is Bitcoin. And what does that mean? He wants to continue to beat it. And when Richard links this on every tweet reply, when someone says, hey, your coin's down 85%, he tweets this. He goes, hey, it looks like it's doing just fine. This is what you want to look out for, because once this breaks out, man, it's over. Like that's where it's never going to go back, right? Because once this broke out, you saw what was this move here? I mean, shit, from the bottom here, 8,300% against Bitcoin. That's nuts. Like, we're talking about the highest appreciating asset in the world, and we pumped 8,300% against it. That's nuts. 8,300% from that capitulation wick. I think from the dollar value, that puts it at least $4 or $5, right around there. something along those lines.
Yeah, and even
Which,
if you account for diminishing returns, I mean, you cut that in half. Like you're still looking at $1.80 to
yeah,
2.40. You know, as for that first, you know, sort of resistance level up there
yeah,
before you start to see enough sell pressure to stop the pump. Because once the pump, by the way, the HEX liquidity is still at the same, basically just slightly higher than it was before the big run
yeah.
up
We'll shift
from
into that in a
10,
sec.
10. Yeah. So let
The
me,
last thing,
yeah,
the
go
last thing
ahead.
I'll
And then
leave
I
you
got
on
a
on
HEX
this
Dom chart. Yep.
is, guys, think about Richard. Think about why he's here. Think about what he's trying to accomplish in the space. He's in it for glory. Do you think Richard is going to allow or want his coin to do this? Do you think that this is what's going to happen? Like, just honestly ask yourself that. He links this specific chart. Do you think he's going to let it just poop out like this? Like, honestly, think for yourself. Think about how the
I mean,
structure
just
of the
think
coin is.
about how much money it would take to get down there.
Exactly.
The more
You know what
times
I
that
mean?
it holds and the more $2 million sells get bought up in 15 minutes, there's just not going to be hundreds of millions of HEX to sell anymore.
You
That's
got to
just how
understand.
it
And that's
is.
the thing is, like, I know,
There's
and
only
let's talk
16
about
billion.
this.
There's only 16 billion, I think, or no, I'm sorry, 60 billion of all of HEX is in user hands. That's not the origin address. That means that half of that's staked. So there's really only like 24 to 26 billion coins. And I said that only 4 billion of those were even a threat back in May. And we've already worked
Oh,
through half
shit.
of them,
Yo,
over half.
couple things real quick. I'm going to cover my last point here real quick. You should cover yours. Richard just launched a space live. We should hop into that. But I want to cover one thing real quick. Whales only updated my worldview on this a little bit as it pertains to trading. Most people would say, hey, the more something touches something, that it's going to become weaker from a trading and technical perspective. But I encourage you to look at it like this, right? You have level, 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 level that marked the bottom. 4 times it touched. It marked the bottom. You would think, oh, it's getting weaker, weaker. It's going to break down. Bottoms in crypto are typically marked by touching it multiple times. Boom, 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 boom. It's never been more clear.
Yeah, and I can
Yeah.
piggyback on that with my chart if you're ready.
Yeah, you can swap it now. Yep.
All right. So here we got the HEX dominance chart. What this chart is showing is HEX, how much of the total market cap of all cryptocurrency HEX is accounted for. And to Ryan's point about the level tapping, like here you can really see truly horizontal levels being supported and protected.
Which would scare most TA experts. Most would say this is representing what could likely is going to be a breakdown. You know,
right? But they don't. Yeah, and that is true of some assets. This asset is just not like that in the way that it's traded and in the way that the supply is distributed. So this is a weekly chart. You can see here in the past that before the big payday run up, where the supply of all HEX increased by 30% overnight and created a tremendous sell pressure and market cap dilution, the price was protected here 5 separate occasions for 126 days. And then after the breakdown and the supply increase, again for about 120 days, it was protected once, twice, 3 times, 4 times, 5 times. And so moving to modern time, after the run up where HEX was accounting for 4.3% of all cryptocurrency at 50 cents per token, we've been in the downtrend. Now we've tapped this key level, the yellow line in the middle, which was the failed breakout and then support resistance line that was finally broken in May of 21. That has now become support once, twice, 3 times, 4 times, 5 times. How many more times? And HEX's market cap dominance is trading above the midline of its falling wedge, meaning it's now got some bid support underneath of it that's going to try and lift it up. And it's going to take hundreds of millions of HEX to stop that pump, and then I can get in now into the liquidity. So,
yep, the HEX, dude, that screenshot from Quant Game back in the day of like the wrecked HEX sellers on the HEX bid, dude, it's like it always holds true every single time, man. Like that's the best thing about doing things on a DEX, because there is game theory with how the liquidity pools are set up on purpose. People who don't understand order books, like that idiot seller, wrecked themselves out of like what, half their bag or close. I have to mention close to it because of the liquidity when it was set up.
I imagine that the account that emergency end staked and sold the 84 million HEX, that they were scared by the SEC FUD and they thought it might be the beginning of the end for HEX,
Yeah.
which is hilarious to me because that never even, the SEC FUD to me was bullish. you know, but I'm also not your typical market analyst. Like I look at those are bullish signs. So here we go. We got the HEX liquidity. Now you can see that back in August of last year, liquidity was sat around $3 million and then reached a peak of $5 million in the liquidity pools before consolidating sideways. And then we had in September the huge run up in price where literally $100 million came into HEX. And that's why the liquidity spiked up here so high. Even though 100 million came in, you know, over this time frame, the liquidity in the pool reached a climax of I think it was like 28 million, roughly. Yeah, so like $30 million was in here. And that was at the end, right before the giant capitulation of the 10-cent level. And now here we were, bottomed around, you know, 3 cents to 5 cents for months and months and months. But now we're trending up again in liquidity. So there's more and more USDC coming into the pool, more HEX coming into the pool. The coins accruing value and real new entrepreneurial users purchasing and holding and staking this coin. And the TVL continues to rise, and it's only marginally higher. So the coin price, you know, just as easy it was to pump the price when there was $5 million of liquidity from 8 cents all the way to 50 cents. It's going to be the same thing again. There's only about $12 million in the liquidity pool right now, and only 4 million, I believe, roughly, is USDC. So it really, if a liquidity provider was to yank away the HEX and reset the ratio and let this reset down here slightly lower, like let's say $6, $7, $8 million in the pools, that is the signal we're looking for the pump to occur. Now,
Oh, you know it's going to happen. Like it's in everybody's best interest who wants HEX to go up. That is providing large amounts. Right now, to keep the price stable, it's in its best interest to have a large liquidity pool. But once you see the sentiment really shift, or a big event happens, or something, right, that the catalyst, if you will, right, a breakout, etc., then you thin out the order books on the way up. So what would $100,000 buy may move the price, you know, half of a cent now, and when you do that, it moves it up 6 cents. Like that. That's how this stuff works, guys, on a low float stock basis.
yep. And so to add to that, here we have the actual liquidity pool. And so I'll try to explain this. I've been explaining this now for like a couple months, but it's good to repeat it so that everybody really understands what's going on. So when that liquidity comes into the pool, it's not just like there's $12 million in there and you can trade it at any price. That's not how the Uniswap V3 pools work. The way this works is users put money into the pool for you to trade on, and they earn fees, but they get to set the range. So right now, the market is setting a range of 3 cents to 4 cents for the thickest amount of the liquidity, meaning this is a new trading range, and until you break above 4 cents, the price is going to move by the same rate. So once you break above 4 cents, and if there's continual bid pressure and not as much sell pressure, the price will move twice as fast once you break out to 4, all the way to 5 cents. And then once you break past like 5.4 cents, there's literally no liquidity out here. Each one of these bars is like $7,000, $5,000. If somebody was to buy $1 million out here, they would absorb all of these hundreds of thousands of HEX at that 5.5 cent plus level, and they would slip the price up 5, 6, 7, 8 cents because there's just no liquidity. And all of this liquidity here would need to be reshifted out into the future price.
Yep.
Conversely, if there was a seller to come in and push the price down with 100 million HEX, each one of these bars is only $100,000. So you got 100, 200, 300, 400, 500, 600, 700, $800,000 of support here. So if somebody wanted to market sell 800 grand, it would only bring the price to 3.2 cents. And then you start having $70,000 increments. So now you have, let's say, $1 million here, a backstop on the price. If the price was to get to here, you know, like it had been and just sitting on 3 cents, how many people are going to be willing to let the price slip when there's only $6,000, $6,000, $8,000, $8,000, $8,000? You know, the price would move so far down. You could sell down to like a penny and a
That's
half
kind of what happened.
below.
The liquidity
And that's
pool definitely
exactly
got
what
wrecked on
happened
that guy. Yeah.
on the chart. This huge wick here was just that. It got to the edge here at 3 cents, and the guy hit sell, and the price went all the way straight down to, you know, it was like 1.8 cents or something, or 1.75 cents or something. And then there was resting orders here, that bids that were just waiting to, and then it got bought back up within 15 minutes to get, because there's, again, it works in the same way on the way back up as it does on the way down. There's still only $3,000 worth of HEX here then at that moment. So if a guy's got a $100,000 order in here, he'll push the price back up just as easily.
People forget that's a feature, right? People are like, oh man, that seems sketchy. Like, no, that's a feature. That's transferring weak hands and a majority of their bag getting lost, right? They are not even getting the USD value that they should have gotten had they been a bit more smart about their sell orders. And that's distributing out to people who have stronger hands, and also helping those people because it's not going to cause as much of a price impact, because he's getting a way shittier distribution of USDC for, you know, said HEX amount. So it's definitely a feature, not a bug. There's a lot of game theory that goes into liquidity pools. I'm not going to act like I do that kind of stuff, but you can see it, whether it be a low float stock or something like HEX, which performs very, very similarly, just because of the way the liquidity is set up. You know, there's low float stocks every morning that run multiple dollars a day. It's not absurd to think when funds and capital flow into HEX, you can move $6 in a day. That's going to blow people's minds, but really it's just the right amount of money in the right order books can make basically anything happen. Really, as long as the structure is set up. And that's why some low float stocks, with the way their stock structure is set up, right? That's what the float is, allows them to move that way. You know, that's why Apple doesn't move $100 a day. You know what I mean? It's not the way that the structure of the stock is set up. It takes a lot more liquidity to move it. The order books are so full. So yeah, man, it's just really important and powerful to see all these kind of, like, just call it what it is, all these things converging on each other, right? The HEX versus Bitcoin chart, the liquidity pools changing, the bottoming out, the bottoming and rounding pattern, the sentiment shift, the market getting much closer to a bottom in bigger players like HEX and or not HEX, but a Bitcoin. HEX has likely already had its bottom, you know, so it's all very, very fascinating to see this stuff kind of play out.
And then this chart also kind of reinforces your point that bottoms are getting close with this. This is the stablecoin index chart that I produce, which is basically a composite index of the USDC, USDT, and DAI, which are the three largest stablecoin market caps. And you can see here that back in June, when Bitcoin first capitulated to 17.6, there was a huge candle here where the market cap dominance of the stablecoins grew so quickly and then sold back down and then could not break above this level for, was it a month? And so then you saw a breakdown, and it was a small rally in crypto, because crypto like Bitcoin, ETH, HEX, they'll move inverse to this chart. So like as this is coming down, crypto's going up. As this is going up, crypto's coming down. And you can see here just on this last candle that we broke above it for a breakout, and the breakout failed, and now the stable coins are now stuck at this level. This is the key level to watch whether or not you're going to get a bottom. If this was to roll over and head down, it would signify, again, even further strength in crypto and more risk taking. So stablecoin index is a great chart to watch for that reason, and this is a key moment in that chart.
Yeah, a breakdown.
Not saying it can't go higher, not saying it can't go higher, because here's the thing: is it's interesting because you can print more USDCs, USDTs, and more DAIs, and this will go up. But as long as Bitcoin, ETH, and HEX keep going up too, that they will outpace the amount of new stables coming into the system.
Yeah, interesting. Yeah, because you would want the currency to stay within the system, not being taken from USDC to actual US dollars,
Exactly.
for example.
You notice that this thing just doesn't break the parabola because there's more and more interest.
We want the ecosystem to keep going up, right? That means more
stable coins are being delivered to the world through cryptocurrency. I mean, what I mean is the US dollar, that stable coins had made the US dollar accessible to the rest of the world that didn't have access to it before in other countries, just by using the blockchain. It's kind of funny because the Fed has no control over that, and they probably don't like that now people have direct access to the dollar valuation, and using a dollar, digitally through a through a stable coin. And that's a quote from Crypto Sloth, one of my partners on the private Discord with Silver. So he's super smart, and thank you for that. And then so let's just before we wrap up here, I just wanted to pull up HEDRON, because now we've talked about pretty much all of the important pieces of this market move. And HEDRON's been something we've been covering for some time, and I think it's a huge piece to the Richard Heart ecosystem moving forward because of the functionality it adds to HEX. Right now, the dollar denominated chart is, so tomorrow the auctions go live, and what HEDRON is good for is for purchasing HEX stakes with HEDRON multipliers on it. So this coin did a 30x over the summer, and during the bear market, which is amazing feat in and of itself, and it's all transparent on-chain traded crypto that's only been minted through HEX stakes. So it really is got a tied inflation rate. It's a beautiful tokenomics on that coin. And when the fact that you can like borrow against your HEX stake for liquidity now in the form of HEDRON, or you can use that HEDRON to purchase HEX stakes that have been up for auction, it gives a lot of extra value and added utility to HEX. And so what we're looking for here is I'm starting to see a rounding pattern going into auctions tomorrow. And this 0.786 fib level is starting to be protected. It needs to get above and retest and then confirm continued upside before I'm confident saying the bottom is in on HEDRON. But a chart that I've been looking at here is the HEDRON HEX pair, which is HEDRON's valuation against HEX. It's important because if you look at this chart, HEDRON has completely obliterated HEX valuation now for some time, as far as like price growth. But what's happening now is HEDRON's starting to slip relative to HEX because HEX is starting to show its true colors, its strength again.
Yeah.
And so, HEDRON has been losing value because HEX is just moving so strong, so fast. But yet with that even included, we're seeing some sort of a bounce here on the 200-day moving average. So there might be reason to think that this level will be recovered and we'll get back above 12,000 HEDRON per HEX. And then as HEX moves, even though HEX will move quicker, HEDRON will chase and they'll move up at a 45-degree over the long term in a sort of like premium discount cycle where HEDRON is over and undervalued relative to HEX along this kind of a channel. So something to keep in mind, this does have utility and you do use it to purchase HEX and lock up HEX for longer to get more reward in the short term. So it's a pumpamental for both tokens. And then what do you got for that?
Honestly, nothing outside of the fact that even if HEDRON's going down, it doesn't mean it still can't keep moving up. It's just HEX is really due for a massive move. Like, let's be honest. It's just due for, like, when HEX moves, it's going to fucking blow people's minds. And it doesn't mean that HEDRON isn't going to move with it. All the pairs are going to move together, right? Hart's law on that one. Mm-hmm. And yeah, it's just good, dude. It's going to be, and HEX's price chart right now is looking beyond amazing. Like, if there's ever a time to say, listen, HEX has no care about what the rest of the market does. Things impact HEX, but overall HEX structural ground is that it does not give a shit what the market does, is how it's been moving outside of the whole market. Like,
so you can see
the capitulation event.
Our
capitulation had nothing to do with what happened with FTX.
Right. That was literally just four sellers below 10 cents. Yeah. The one wallet that dumped. How many was it? There was a 200 million HEX dumper along that too. So the HEX USDC chart looks great. Never gonna say that there couldn't be more downside because that's just not how markets work. But it's relative to Bitcoin and ETH right now, it's looking pretty juicy. The other component to the HEDRON and HEX combo is ICOSA, which is when HEDRON is used to purchase a HEX stake, it gets burnt, and then that value, half of that value gets transferred into this new token that gets inflated out of thin air called ICOSA. But that inflation rate is tied to the amount of HEDRON burned. So this chart should track the T-share rate and ICOSA, this is ICOSA versus HEX. ICOSA should continue to gain a premium against HEX as the T-share rate increases as a function of burned HEDRON, because HEDRON only comes into existence as a function of the T-share rate as well. Everything ties back into the rate of inflation for HEX, which is immutable and forever.
Dude, when money starts to come into call it what it is, the Richard Hart ecosystem, and I would include, and that's not to take credit away from people who make coins, off of the HEX mechanics, but I think you know what I mean when I say the Richard Hart ecosystem, right? Coins and stuff developed with the fundamentals of HEX in mind, with transparency and all that good stuff, right? Like HEDRON, like ICOSA, like all these things, Maxi, etc. These things are just gonna like dump on everything. I think ETH is still going to do well next cycle. And to your point, I think that pair, that shift, and notice Richard has not called an ETH bottom. Notice that. Richard has not called an ETH bottom. He's never talked about an ETH bottom. I think Richard knows what you know as well when it comes to that there is a narrative shift coming here, that ETH is going to outperform Bitcoin big time, and the narrative is going to shift there big time. Notice no price calls on ETH on the bottom side. He called the target with, hey, it's going to drop, I think what he said, 27 days after Bitcoin fell out of its parabola. But he has not called anything for ETH, only Bitcoin. And I think he sees that in the charts. I think he sees something different may or may not, but likely so may happen with Ethereum this time around. So I found that very interesting because he's very, very thorough on the Bitcoin ETH thing. And suspiciously, ETH has been left out. It's been all about Bitcoin. And I think that's for strong reasons.
Yeah. Last thing I'll do is just do a zoomed out view of HEX.
Oh, price is squeezing, bro. We've been squeezing this range for so long. Anybody knows who used to trade stocks or knows what the that oscillator indicator does for like a price squeeze? It means that there's going to be explosion to the upside or downside imminently. Godwell kind of started that, but it was almost like a testing the waters. I really consider what he did there was a testing the waters of the market sentiment. It spooked out some people who had some money, wanted to make some quick money, and then also that one wallet capitulated. And I think we're definitely due here within the next, remember that my tweet, I said within the next 30 to 60 days, there's gonna be something big that happens. Bro, we're very close. I think by either end of November or very early December, we see some serious moves to the upside, and the liquidity range is shifting to that 7 and 10 cent target for HEX.
Okay, so I got a question here in the from Mark in the chat, and he's asking, will Pulse and PulseX outperform HEX? So the quick and dirty on that is it's going to be a give and a take. So what's going to happen in my eyes is there's going to be a launch date announcement or a V3 announcement for a testnet that's going to do the whole new version of Pulse Chain, and that's going to ignite some excitement across the market, and HEX is going to see a pump. And you can see as the price is getting squeezed here into this little triangle, it's setting up for such a move. And what that means is that all of this value is that has left the ecosystem for the last year is going to start to flow back in, and then that money is then going to further be used to pump Pulse and PulseX upon the launch of that. So like you might see HEX move first, then Pulse and PulseX launch, and then they'll rip hard, probably harder than HEX, and then that money will then eventually flow back into the store of value, which is ultimately HEX staking. And yeah, they both can. There's 100% totally possible that Pulse and PulseX are going to just do crazy returns that you might not get in HEX in the same way that Ethereum outpaces Bitcoin, because it's an innovation in technology and it comes with all this added functionality. And there's just if it does what it says it's going to do, it's going to be an amazing innovation in the space. So yes, they can outperform HEX, but that doesn't mean that you should like turn a blind eye to HEX, because that's what got us here, and that's ultimately where the value will return to in the same way. And it'll begin this. If you've ever seen that altcoin versus Bitcoin versus altcoin cycle, where first Bitcoin runs, then Bitcoin pauses, then altcoins run, then altcoins pause.
Yeah,
That's that back and forth movement of money between assets. It compounds. New users come in, green candles. New users come in, green candles. And it's just back and forth. And that's what creates these long extended parabolas and these huge bull runs. So there's going to be a lot of people that are going to have to learn quickly how to get into HEX and how to get into Pulse and PulseX, DeFi related trading and stuff like that quickly. And it's going to start to get, there's going to be pressure on the outside world to learn that stuff quickly and get in, because the candles are going to be printing so fast. And it's just going to create a critical mass. And I see like lots of upside on this ecosystem.
Dude, real quick, do what people are forgetting about again, and you see tweets about this once in a while, to get to Mark's question again on a different perspective. Guys, this is a stock split. People are forgetting that. You're getting a copy of your HEX and all of your stakes, liquid or otherwise, on the other chain. We don't know what the AAM bot is going to be doing and how that liquidity is going to be set and when equilibrium is going to be made. But dude, I mean, HEX doing a 50x on both chains is a massive thing, not only for the price appreciation, but for your stakes too. So people forget, smart people understand what a stock split means. They understand how bullish that is and what the price is going to do in relation to that. Look at Apple, look at Amazon, look at some of the bigger players who have done sometimes 3+ stock splits on their price. Look at Tesla. It's done like a bajillion at this point. So you got to remember is any money that you don't have here at 3.5 cents is really a 1.75 cent entry, because you're getting that stock split value. And think of it this way. No one's going to remember 8 years from now that we got a free copy on Pulse Chain. No one's going to remember that, right? Just like when Richard says he got
just like nobody remembers Bitcoin. Big Payday or nobody
or the free
remembers. Like,
Bitcoin,
there's so
right?
many. Oh, sure.
Mining the free. That's the perfect thing. Nobody cares now who buys on Coinbase a Bitcoin for $16,000 that Richard
Right.
got 50 free fucking Bitcoin back in the day. Like, you got to
Right.
understand
I mean, I was
how big
mining
the deal that
Ethereum
is.
at $10, so like I lived it. I literally
Exactly.
lived the experience of what it
So the
was like
stock
to,
split is
yeah.
so valuable, and smart people are buying that 100% who know what that means for the long-term health of the price performance. Because you understand, man, Richard's got a lot of money in those stable coins. You don't know what's going to happen. You really don't. If this thing, let's say HEX pumps up for the stock split, which it will, let's say it hits a 30-cent target, PulseChain goes live and people are starting to dump, but then all of a sudden the liquidity comes in out of nowhere to prop up both prices on both chains and they stabilize at 30 cents each. People are going to be shitting bricks. Oh, which chain do I buy? Oh, fuck, both the prices are moving up at the same time. It's going to be a shit show. You don't want to be caught in that. You don't want to be stressed trying to figure out what chain you want to buy on. Secure it now, because then you can
Yeah,
just pop a bottle of
it's
whiskey
huge.
and watch the charts and not be stressed, dude. Not to
Like,
mention let your
why
stakes do
would
their thing.
you
Why
wait
would you
to
chase
buy?
that, dude? It's
Why
you're
would you not
retarded.
take the doubling? Why would you not?
Dude, anytime, look at the price chart on Apple or Tesla or Amazon. Anytime they announce a stock split, the stocks fucking ripped every
Okay,
single time. Every time.
I will.
I made so much money on those.
Do you know the date? Can you look up the date quick?
One of them was Tesla, summer of 2021. If you look at that,
Okay,
let me
I'm gonna
look
pull
up
it
the
up.
date here, and you pull that up. Tesla stock split 2021, and you'll see this. Look at like the daily chart. August 4th, 2022. That's what it was. The 3-for-1
Okay.
stock split. Let me see all of them though,
Yeah, it's my computer is getting slow. 1 second.
because that was pretty recent. I want the one that was before it. Oh, here we go.
Daily. So it was August of this year.
History. Now I want to look at so it went through 2 stock splits. The most recent one was August 25th. Don't look at that one. Where was the other one? Here we go.
I think it happened in 2021, maybe, or 2020. But I mean, look at these gaps up on this chart. It's amazing. Tesla's a crazy chart.
Okay, the first split took place on August 31st, 2020. That was a 5-for-1. That was when I was buying.
Right.
So I knew the news was coming. I was buying. And I knew the news was coming. Like it came out that day, and that was I had already had some Tesla stock, but
Okay,
I
so
bought
August.
More.
So yeah, in August. So you saw they split your stock. Some people took profits. Then within 2 months, you had a huge
Remember, the
gap
news
up.
came out before, so you got to look at before the date, right? The split actually happened on the 31st.
Oh, okay. So yeah,
they
so
announced
then
it.
did they announce it in the spring? Because in May there was a
It
huge
had
run
to have
up.
been announced a few months prior. So look at the run up.
So there was a 50% run up on a stock, mind you, in 2 months.
And that's Tesla. Think about how
And
much
then
money needs
the
to move
split
that shit.
happened and people took profit, and then it's
Uh-huh.
consolidated, and then you had
Yep.
the huge run up.
Mm-hmm. And then the
So
next one was August of 2022. So look at the run up going into August of 2022. So go to maybe June, May, and then look
yeah,
at the
so
run up
here it
there.
is. Even in a bear market, so in June, here we are.
There you
There was
go.
a huge run up. There was from the low to the high for a triple
Another
top
50%.
too. It was a 50% move, and you got a triple top. So you had 3 chances to exit.
Yep.
On that pump.
Dude, it's like every time it's guaranteed money, because you got to understand what this does. Ready? Here's the kicker. Psychologically, when the price of the stock comes down, people are willing to buy more of it. When Amazon is $3,000 a share, that does not get somebody who has $50 to spend excited about it.
Right.
That is the big deal. That is a psychological reason
I got you.
why investors buy the stock split. So when HEX is at, and the HEX is a little different here, right? Because it's so cheap already. That factor may not play as much of a role, but you got to understand the liquidity and all the differences that come into how PulseChain is launching and what the AM bot's going to do, right? But the point is HEX could potentially go another split because of something happens and it goes from $300 down to $30, right? That's going to change an investor's mindset on how much they want to buy, right? Like Bitcoin right now. Are people more excited about buying Bitcoin at $16,000 or less? Probably less, because it's so damn expensive. The thought of getting one Bitcoin is so out of reach. Think about what that does to the average investor mindset. So that is why stock splits are such a strong thing. And people haven't honestly woken up to that yet with what's going on here at the stock
I think
splits.
your typical hedge fund managers would be happy to dollar cost in all of their retirement plans money into Bitcoin slowly over time and just watch a slow growth of, 8% year over year. They'd be happy with that. And that's what Bitcoin's role is going to become. It's no longer going to be the pump coin.
Yep, 100%. It's going to be a large market cap like gold. It's going to move a little bit better than gold.
I
and
did
that's
want
probably
to.
what's going to happen.
So we had a question on metals too. That was what I was going to pull up. Was the so gold just did a triple bottom, and it could do a consolidation sideways, and just it's going to start to work its way higher, I believe. I'm not going to pull up the chart because we're about done. But yes, I would say, metals are thousands of years old, so and they're always going to have a value. So there's nothing wrong with that. But in the same way that Bitcoin is going to do a slow growth, so will metals, right? They're a defensive play in times of uncertainty. So if you do get huge downside into 23 that we say can happen but aren't necessarily guaranteeing, then yeah, the metals and the bonds are going to be where you're going to want to put your money.
Yeah.
The last thing I wanted to do before we wrap up is just show you a completely, this is not financial advice, obviously. This is just a kind of a FU crypto chart. This is if HEX were to repeat its fractal pound for pound, where you'd end up and roughly the time frame. So, I mean, this is basically if you took the entire fractal of HEX and this was the bottom on HEX, you'd be seeing a price of anywhere from $40 to $100 per token going into 2025. Now, I'm not saying that's going to happen like that, but I'm just saying if you just look at the structure of this chart, we have a lot of headroom and it can get there quickly on low liquidity. And once the price starts to move and there's support, like people are going to get scared that they're going to get left behind because Godwill's left people behind before twice. Once here in April of 20, and once during Big Payday after that rip down, and then once in April of 21. And so, April of next year is like a good time frame to kind of look for,
I
with a
think he
potential
leaves us
bottom.
behind at 50 cents, and then he leaves people behind at $1 because you know how big of a deal $1 is going to be.
Correct.
Once we hit $1, we hit 5. Once we hit 5, we hit 10. That's the way it goes with low float stocks too. It's just
and so like if you take this fractal, see this wick low on this yellow fractal, if we zoom in here,
probably post split sell off.
Yeah, so if we use this like wick as an example, as like the same, if they were the same kind of price action, and we do get here above 5.4 cents, who's going to say that Godwell isn't going to come in here and just rip price, or some other big player isn't going to come in here and just get us back to 10 cents quickly? And does it play out the same? If it did, you'd consolidate between 10 cents and 30 cents, which that's basically the all-time high for quite some time. Let's see here. I think it was actually so if you just got back to 20, which is basically what we lost with the 80 million dumper, immediately, because there was really only one guy that created this major panic, and you get back above that one guy's out. Well, now you can trade between 20 cents and 50 cents for an entire year, which is great for Hexicans. It gives them a chance to exit and profit, and it gives new buyers a chance to be excited and buy an asset that's moving, a decent trading range, a 30-cent trading range over a year time frame. And then going into 2024, when the real bull market kicks off, is when you might see price accelerate to the upside with, this isn't even accounting for a pulse chain. Maybe a pulse chain launches, this end of this year or next year with the highest of stakes, and you do end up getting one of these giant Godwell candles. So exciting times for crypto, exciting times for HEX and the ecosystem. Right now, the price is being super squeezed on the price chart, and if this weekly closes green, that's a huge sign. Monthly
Dude,
closes
it's
green
so
on Bitcoin.
badass.
Watch out too. So
yeah. Well, Godwell bought
everybody.
here a couple weeks ago, so we'll see what happens.
Yeah, he did. He bought. He started this pump
exactly
off 3 cents, and he ran it all the way up to 5. And it wasn't just him. There were other whales started to jump in too. And then the liquidity, when that happened, people, smart money saw that, and they shifted liquidity around a little bit, which gives us a little better of a setup. So.
Yep.
All right, Ryan. Well, thank you so much for joining me this morning, and it's been a great show, and we had a lot of good things to say, and I hope everybody enjoyed this and can come back and watch it a couple times and get something out of it.
Yeah, man. Hoping to be on again soon. Keep you posted.
All right. Thanks, everybody. We'll see you soon.